What's good, YouTube? It's your boy Nate Rodriguez, and I'm back again with another video for y'all today. And in today's video, as y'all seen in the title, I'm going to be covering divergence. Now, you might wonder, you might ask, why is divergence important? You might wonder, you might ask, what even is divergence? That is what this video is for. I'm going to enlighten you guys, help you guys understand this in totality, so you guys could use it as a confluence in your own personal trading and win more setups and be more profitable. Because overall, the more confluence you have, the more reasons you have to understand what the probability of something happening is in the market, the more likely you're going to start to win trades. So divergence is one of my favorite confluences that I always use. This is probably the only indicator I actually use on my charts, just the RSI. So starting off there, the way that you would use divergence is you would add the RSI to your chart, and you can do that very easily on TradingView. If you guys want a video where I explain to you and show you guys how to add divergence to your chart, let me know, but I feel like it's very easy. I feel like you guys would definitely be able to do that by yourself. So just let me know if you guys need it, though. I will do that video for you if you need it. But pretty much what divergence is this will be your RSI down here. And pretty much what you can see is the actual price, which is up here, is doing the opposite of what is actually going on in the RSI. So as you can see in the visual representation, you can see that price is going up. It's a little mirrored in the camera, but price is going up. And on the RSI, you can see that price is going down. So they're doing the opposite. And what this means is 9 times out of 10 is it means that a reversal is coming in the market. So a reversal coming in the market will pretty much mean, if you don't know what that means, is that if it's going in an uptrend, the market's eventually going to break structure and go into an opposite direction, or a pullback is going to happen, just depending on where you are at in the market. You don't want to use this specific confluence as your sole confluence, your only reasoning for taking a trade. That would be, very risky. But you could definitely combine this up with multiple other confluences, and ultimately that's just going to make the probability of you winning your trade way higher, and it's going to help you pretty much be able to decide on your direction of the market, where you believe it's going to go, when you believe it's going to not necessarily believe the direction of the market, but understand when a certain shift that you're expecting in the market is going to actually occur. So that is pretty much what you're going to use divergence for. It's very simple. It's very easy. You can see divergence on every single time frame. You can see it on the 5 minute, you can see it on the 10 minute, you can see it on the hour, the 4 hour, the daily, the monthly, the weekly. Now, what I want to get to with that is on those different time frames, divergence will be stronger. So if you're on a 5 minute time frame, the divergence might be a quick 3 candles, 4 candles. If you're on the 15, it might be a couple candles. If you're on an hour, it's going to be a way bigger move. If you're on a 4 hour and you're seeing divergence, it's going to be even bigger move, and so on and so forth, all the way up until the monthly time frame. So you definitely want to pay attention to that. You don't want to look at some 5 minute time frame divergence and expect a huge shift in the market, because that's just not the case. But it will definitely let you know that something is going to happen in the market. You definitely want to pair this up with other things such as support and resistance, trend lines, candlestick exhaustion, other things like that, breaks of structure, all types of things like that. And that will ultimately help you understand what's going to happen and predict when it's going to happen, because it's not really if something's going to happen in the market. A lot of times when you understand what you're doing, it's pretty much just when something's going to happen in the market. And us as traders, our job is to understand when, and to be able to take advantage and get in at the right time and get out at the right time, because what you don't want to do is get in too early and then be in a lot of drawdown. So I hope this one was very quick and easy. I hope you guys can really just understand this quick and easy like that. If you guys do have any questions, just comment down below. Let me know. I'll definitely answer them questions for you guys. But this is pretty much divergence. It's very simple. It's very easy. Eventually, I will do this on actual charts so I can show you guys examples and things like that. But I got to figure out how I can set that up, because I am new to the whole YouTube thing. I just trade personally, but I'm going to learn that, because I do want to help you guys. I do want to give you guys value. I do want to help you guys change your lives and become more profitable. So that video is definitely coming, where I actually show you all these things on the actual charts. But as of right now, I'm just, being basic with it and giving you the pure basics, so you guys could have a kind of understanding, so that when I get on the charts and you see all the candlesticks and things like that, you have a good foundation, and the candlesticks and all the mess on my charts doesn't scare you guys. But, if you felt like you got some value out of this video, if you understand divergence more, just comment down below. If you do have any other questions, and I appreciate if you guys would subscribe, help build up the channel, help share the video to other people that you think this may help. And I'm gonna catch you guys in the next one. I'm gone.